Good evening, students. Good evening, Milind. Kavita, good evening to all of you. Students, today we will do this Q&A on the valuation rules and we will finish it off. Okay, so let's begin with this one, students, now. One point, students, as you are aware, the RTP has already have come. Now, so far as the RTP is concerned, students, I told you already that DT RTP, I'll do it separately. Primary in this case, I should have. So the DT RTP, students, I'll do it separately. Maybe just give me some few days. I'll just deal with that RTP quickly. 3-4 days, I'll just try to go through the content months, check out the relevant importance, and thereafter I can do the RTP. At the same time, I will also give you ABC analysis. So if you allow me this RTP session to deal with it, I will not only do the RTP, but I will also engage into this very important, that is the ABC analysis, because I think many students have that level of concern about the fact that the last 6 days that is there for them, how do they go about it, isn't it? That exactly is the point. So I'm going to prepare very thin nuances from the RTP. When we'll do that way. IDT RTP, friends, the question answer, in any case you are doing it, I would want that the IDT RTP, I'll just merge it with the this one, with my topic, which I'm doing it any case. And as you all can appreciate that every topic, students, then the Q&A also I'm marking, which are important from every particular chapter. So one Q&A we are doing practice for all the Q&As, and then I'm also marking the important Q&A that you need to go through it as your last day revision. Is that clear to all of you? Last day revision, students, the Q&A has to be referred. Don't be under any kind of a misconception that you don't have to refer the Q&A. You have to refer the Q&A. I hope that all of you are clear with this one. So the selected Q&A, which we are doing it, so you can say top 25 to 30 Q&As of each topic, students. 25 to 30 overall Q&A in IDT you have to do on the last day. On that note, students, let's begin. Let's proceed, students, in this case. Sometimes the screen picture is so nice. Myself, these are such a beautiful this thing. This looks like this moon, which is full moon. Now, students, in this context, students, begin with this one, students. Now, students, I am now starting with the questions. Some of the questions that will come to us from the specific valuation rules, which we haven't touched upon. I'll do it at that point itself. Let's try to run through it. Kripa. Two questions are very important. I'll tell you which are the two questions. So, already, if you remember, students, Avantika question from this list, I already have earmark for all of you. Avantika. Now, two more questions, students. Today, I'm going to mark for all of you. Two more. Which are they? I'll just let you know. Now, students, coming on this particular part, question number is on the valuation rules. Question number, students. Quickly, question number 4. Question number 4. Please take question number 4, students, all of you. If you see over here in this regard, as far as question number 4 is concerned, Rajesh and Company, a partnership firm, provides financial and management consultancy to a group of companies for an annual retainership fee of rupees 15 lakh. So Rajesh and Company, what they are doing? This is a partnership firm, students, and they are providing a providing what, students? A financial and management consultancy to a group of companies for an annual retainership fee of how much, students? Of these 15 lakhs. That is the monetary consideration amount that has been paid, which is rupees 15 lakhs. Further, the firm is provided with a car along with the driver. for its exclusive use throughout the year. So that firm has also been given the car from the company, students, for its exclusive use. Be careful over here now, students. The fuel cost is also borne by the group. Rajesh and company pays GST on the amount of rupees 50. Is the value of for the service provided by Rajesh and company correct under GST law? If not, please elaborate. Be careful. Please elaborate. That is good. I think we know the answer, but that is not important for us. Please elaborate. How much I should elaborate? Students, how much I should elaborate? That is a real question. So how much I should elaborate? That will depend on the marks. So if it is only 2 marks question, that is point number one. Or it could be 4 marks question, one of the two. In this case, in the 2 marks question, students, straight away, you will have to pull up what, students? Straight away. Rule number 27. And write the relevant provision. What is the relevant provision, students? In this context, relevant part of the provision. Relevant part of the provision. And do you know what is the relevant part of the provision over here? The relevant part of the provision over here is the, if you see, students, let's recall rule number 27. All of you, please recall rule 27. How do you do the evaluation? So first of all, applicability of rule 27 is in respect when the consideration is 100% non-monetary, or it is partly non-monetary and partly monetary at that particular point of time. No, Aishwarya, it's a non-monetary consideration. Car and fuel, all these are non-monetary benefits which are being given. So in that particular case, what we say, the rule 27 says that in such particular case, when the 100% consideration given is non-monetary, or partly it is non-monetary and partly it is monetary, then rule 27 says, it tells you 4 things. What are the 4 things? Point number one. First, you have to take up the open market value of the supply. The supply that you are doing, of that you take the open market value. If you have got the open market value. But you say that, so no, sir, I don't have the open market value. Then point number two says what, students? Point number two says, in that case, if A is not available, then point number B says that the money that you have received as a consideration plus the monetary value, be careful, plus what? The monetary value of the non-monetary consideration, that also would be added as close to make point number B. So point number B, tell me, what is point number B? The money that you have received as a consideration plus what? The monetary value of the non-monetary consideration. That is point number B. If you don't have point number B, that is, you cannot determine, say for example, the non-monetary consideration, monetary amount you cannot determine. Very antique piece you have received, so you cannot determine. Then you go to point number C. And in that point number C, students, what do they say? If A and B not possible, then C says what, students? Then in that case, goods of like kind and quality. At what value the goods and like kind and quality are being sold? This is what primary you will take. And if that is not there, then D, 30 and 31 in that order of sequence. 30 and 31 in the order of sequence. Isn't it? Now, if you see this question, this directly, A is open market value, students. This is like kind and quality. Isn't it? Now, if you see over this particular question, in this question, they are hitting on this part. Point number B. So, what I told you, students, if it is 2 marks, then what is the relevant part? What is the relevant part in this? If it is for 2, then you just, that as per rule number 27, the when the consideration received is non-monetary and the open market value is not available, like this you have to write. Getting this one? You don't have to write the entire A, B, C, and D. Please see what I have told you just now. As per rule 27, when the consideration received is partly or wholly non-monetary and the open market value is not ascertainable, then in that case, value such supply shall be what? M, monetary money received plus the monetary value of the non-monetary consideration. Will you be in a position to write like this? So I need point number B, but what is the approach to point number B? Not directly, it's smartly. First, applicability. When point number B is applicable, applicability would be, now you require two conditions to be satisfied. Condition number one. Condition number one is, I told you already, students. In this case, that the consideration received is non-monetary, either wholly or partly. And is a game. And open market value is not ascertainable. Then the value is this. I'm telling you, students, Rule 27 you have by hearted verbatim. Rule 27 you people have by hearted verbatim. You know it. But now, could you write it the way I have told you just now? Could you write it the way I have told you just now? For 2 marks, students, you cannot write like this. In this case, Jyoti. So how is the approach? Therefore, for 2 marks. 2 marks is the way I told you. You need to draft it. Applicability. Applicability for point B. This is the way you have to draft it. I hope that all of you are clear now with this particular proposition. Applicability for point B. How to directly jump to point number B. So, how do you jump to directly point number B? The answer would be that the valuation that we are talking about it under rule number 27 is applicable when the consideration received is either partly or wholly non-monetary, and where the open market value is not ascertainable. In such case, the value shall be money received plus the monetary value of the non-monetary. I hope that all of you are now clear with this one. Exactly the game. If the question is of 4 mark, students, in that case, then in this situation, then full provision needs to be written. That full provision has to be written. Full provision has to be written. I hope that all of you are clear with this one. 4 marks, the problem, students, I'm telling you, 4 marks will not have any challenge. The challenge in CA final is when the question is only for 2 marks. Then what to write? This is the problem. Because in that 2 marks question also, you write or you tend to write like the 4 marks question. Write the full provision, or either you will skip the full provision or you'll write the full provision, but the art of presenting the relevant provision is missing, and that is the reason why I'm putting this in your head rather than knowing what is the solution, which you already know. What is important for us? Important for us is how to present our answer. I hope that now you can see the difference from where you were just 10 minutes before and where you are now 10 minutes after. Come to point number 5, students, now in this case. Point number 5 over here, if you see, the supplies of commodity Y to the market are channeled through a state marketing corporation. Please understand from this particular part. The supplies of commodity Y to market are channeled through through SMC, State Marketing Corporation, which conducts an auction each day at at the price. So what the SMC does, so I am channelizing my product Y, not directly to the customer, but I am channelizing the product Y through SMC. Now what SMC does? SMC on that product Y, it does the auction. On that product Y, what does it does? Indeed, it does the auction, students. Now below that, Gupta and Son, students, supplies commodity Y through the State Marketing Corporation. So that who is the supplier? Gupta and Company. And they are supplying. Do they supply directly to the customer? No. They are supplying commodity Y through the SMC. So in that way, should SMC appear to be like an agent, that agent of para 3. Now, students, in that case, if that is the scenario, then in this situation, students, you have to refer rule number 29. You need to refer rule number 29. The only point of our observation is that can an auctioneer, can that be referred as an agent? So this is a very popular question of the ICI. Please understand this, they have targeted at least 2 or 3 times. So we don't want to make such other R&D on this part. Your answer has to be very straight. 2-3 times they have asked this question in the examination. So the bottom line is, can the auctioneer. Can they be considered as an agent? And if you say yes, sir, it can be considered as an agent, then in that case, the valuation will fall under rule number 29. The valuation will then fall under which rule? Rule number 29. Is that point clear to all of you students? Exactly the point. So now if I go through this particular proposition, students, if I go through this particular proposition, then what I get? What I get, students? Quickly, see the answer. The State Marketing Corporation is an agent in the meaning of the expression as defined in section 2, clause 5 and all. Don't forget it. As per the definition of agent, it includes the simple word, students. Agent, as per the definition, includes, in a simple word, agent, as per the definition, it includes auctioneer. That is it. Therefore, SMC, that is State Marketing Corporation, can be considered as an agent. Point number 3. Accordingly, valuation for which supply? Valuation in respect of what? In respect of supply from whom? From Gupta and Company to SMC. Gupta and Company to SMC shall be undertaken under which rule, students? Shall be, and this is my point number 3, shall be undertaken under rule number 29, students. I hope that all of you are clear with this one. Under rule number 29. So this is my third point. So what was the first point? Please tell me quickly. You keep scribbling in your notes quickly. Don't sit idle. 1, 2, 3. This your mind should be occupied for each minute, each second you are spending. Your mind should be occupied and keep scribbling across it. Point number 1, agent includes what? Includes auctioneer. Point number 2, therefore, SMC being an auctioneer will be regarded as an agent. Point number 3, valuation in respect of which supply you're talking about it? Supply from Gupta and Company to SMC shall be undertaken under rule number 29. Is that clear to all of you? And students, rule number 29, if you know, there are 2 points which are there in rule number 29. I hope that all of you are aware of this. Rule number 29 has got 2 points, A or B. B will be referred when A is not there. And B is a standard. What is that B? Which is standard? Rule 30 and 31 in that order, in that sequence. That is what the B is all about. So therefore the question is, then what is A in that regard? And what is A, students? So A is nothing but, truth, in this context. So A or B. A has got 2 propositions, students. What is that? OMV or open market value of supply, or what, students? 90%. What is this A? I'm talking about rule number 29. Now you have to write point number 4. Rule 29, full provision. Open market value, or would be compared with what? 90% of the value of like kind and quality. Value of supply of like kind and quality by recipient. Who is the recipient? That is the agent, to his unrelated customer. That is what it is. Whichever is higher. That is what A is. That is what is A, students. Isn't it? And that exactly the point. That is what is exactly the point. So A is, if you get the open market value of the supply. Now this supply is between whom? Supply between This supply is between the principal to the agent. Supply between principal to the agent. That is what we are talking about it. And this 90% of the value we are talking about from whom? The supply between. Who's 90% of what? 90% of, in this context, 90% of the supply between that agent to the customer. 90% of the agent to the customer. Be careful now. You very careful about, because if they give you a hardcore data, then you should not get confused what I am supposed to pick up and what I'm supposed to ignore. That's the reason why I'm just putting it. This need not be written in the examination. This is just only for your quick revision once again that I'm doing, because this revision is for the final time. So that, and by the way, whose valuation you're doing? Which valuation you're doing? I told you already. The valuation, which valuation you're doing, friends? Valuation that you're doing in this context is in respect of the goods supplied from the principal to the agent. So this is the principal to the agent. That is what the valuation that you're doing it in this context. So therefore, of this valuation that you are doing, Rule 29 says either you take up the open market value of the same supply means from principal to the agent, or or second option is 90% of value of the supply of the like kind and quality by the recipient, which is the agent, to whom? To his unrelated customers in the auction that he will do. So that is the 90%. So whichever is the two, if you have got both the amount available, then higher. And in that situation, students, last point number B, if A is not available, B says 30 and 31 in that order. Now, in this question, students, they have not given you anything. Students, in this question, they have not given you anything. So where our answer will end? Our answer will end only in the form of theory. But be careful, when you write theory, you have to be extremely careful how you write your theory. So I think this is your point number 4. In this case, point number 4 is the valuation rule. So this you will explain, and that is how you're going to add 4 points. Students, 4 points. First, you made that agent includes auctioneer, and therefore in the second point, SMC is therefore an agent. Third is what, students? In this case, the valuation would be under, in this context, the rule number 29, and that is what we are trying to take it for. Can we proceed for the students now quickly? Now, the specific valuation rule, students. Your favorite valuation rule. This is a specific valuation rule, students, that is come. All of you. Are you ready? Easy Coupons Limited sells coupons that are redeemable against specified luxury food product. Now, for coupon, students, there is a concept on time of supply also that will come up. So there is a specific time of supply for these vouchers and all. At the same time, there is a specific valuation provisions also for these vouchers. There are two things which are specific. Which are they? One for the time of supply for the vouchers, and second one is for the valuation. Right now we are doing valuation. The next class we will do for the vouchers. We will do for the time of supply. Let's look upon the point number 6. So Easy Coupon Limited sells coupons that are redeemable against specified luxury food product at retail outlet. Each coupon is sold for value of rupees 900, but is redeemable for supplies worth rupees 1000. What is the value of supply of such coupon under GST law? Now, students, there are two things as you can see very clearly. 32.6 is the relevant rule. Even though you don't remember the sub rule, at least rule 32 will be sufficient enough for. So, rule 32 gives you two options. What is the two option? Number one is the price that you paid to get that coupon, which is rupees 900, or the value for which the coupon can be redeemed. The value for which the coupon can be redeemed. So the value for which the coupon can be redeemed in this question is rupees 1000. So the price that you paid to get the coupon, which is 900, or the value which or the value that you can redeem from such coupon, which is rupees 1000. So what is the value to be adopted as far as rule 32 is concerned? So the answer is the value for which the coupons can be redeemed becomes the value under rule 32 sub rule 6. Okay, it is not the price that you have paid for the coupon. If you say, students, if you say, sir, it is the price that is paid for the coupon should be adopted, then I must tell to all of you, then your answer is 15.1. It's a transaction value then. Didn't you realize? Then it is what? It is a transaction value. Then please go to rule section 15.1 in that scenario. But do you go to section 15.1? Answer is no. If you say the answer that, sir, it is a price which I have paid to get the coupon, then it is 15.1. Your answer is not in 15.1. You are in valuation rules 15.4, read with the valuation rules 32.6. Therefore, it is not the price that you have paid, but the value for which the coupons can be written. Let's come to question number 7. I hope that all of you are clear with this one. Every one of you, the point to it. Indeed, a pharmaceutical company supplies a drug intermediate to its own unit in another state for conversion into formulation. A pharmaceutical company supplies a drug intermediate to its own unit in another state for conversion into formulation. Please understand, a company is supplying what? A drug intermediate to its own unit in another state. So distinct person, deemed distinct person. So what I am giving is the intermediate goods. And to whom I am giving the intermediate goods? To that other unit in the other state. And what that unit is doing is converting into formulation. Formulation means what? Final product, like a medicine. So I am supplying the intermediate goods from my factory to that other unit in the other state, which is a deemed distinct person. And what they are doing, they are converting into the formulation, means the final product. The drug intermediate is exclusive to this company. If you recall, students, which rule that is going to be applicable, just recall, students, rule number 28 in this context. Rule 28 is going to be made applicable. If you remember, students, rule 28 and rule 27, we did it parallelly. Primarily. And in rule 28 and rule 27, which we did parallelly, you just know rule 27 had 4 points, which is that 4 point OMB, open market value. Second one was about the value of the money received plus the monetary value of the non-monetary consideration, point number 2. That is the monetary value of the non-monetary consideration, point number 2, which is very unique to rule 27 only. This monetary value of the non-monetary consideration is unique to rule 27 only. Then point number 3 was the like, kind and quality, and point number 4 was 30 and 31. Now in rule number 28, the unique thing for 27 was the value of the monetary value of non-monetary consideration was unique to rule 27. So what we do in rule 28, we remove that point number B, and all the other points remain as it is. All the other points, students, remain as it is. Which are other points? Point number 1 now, OMB. Point number 2, students, what is point number 2? Point number 2 is like, kind and quality. Point number 3 would be rule 30 and 31. But what is very important, students, over here in rule 28 are the two provisos. Remember two provisos, students? This is the real game. The real game. Proviso 1 and proviso 2. Are you aware of it or forgotten by now, students? Aware of it or forgotten by now? Proviso 1 and proviso 2. This is the real game. Always revise. You are getting the last option and opportunity to revise it firm decisively. These kind of a provision. Make the best use of this particular opportunity. Therefore, students, proviso 1 and proviso 2. In this regard, what is your take altogether in this context? Quickly, for proviso 1, students, if you all are aware that in this particular case, these further supply of goods is done by whom? By the recipient. By the recipient. If the recipient is doing a further supply, then the value, so this would be if there is a further supply of such goods. This is very important, and that's the reason why I'm putting the word such in capital. So if the recipient is doing further supply of such goods is done by the recipient, then you have the option to take the value. What is that value? 90% of the value of like, kind and quality. That will become my valuation. Valuation of the goods being supplied. Supplied to whom? The goods being supplied to whom? To this particular deemed distinct person. Okay. But now you tell me whether this first proviso can that be made applicable in this question. In this question, whether the first proviso can that be made applicable, and the answer is no, because it is very clear from this question that what I am sending is intermediate goods. What I'm sending is the intermediate goods. And what this other unit is doing, is they reselling the or supplying IG? Are they supplying IG? No, they are on the contrary. They are in fact converting it to the final product, and therefore it is a final product which is getting supplied by the other part. So therefore, one thing is for sure, forget proviso number one. Proviso one is not applicable in this question for sure, because the other unit is not supplying such goods. It is not further supplying such goods. On the contrary, the other unit is first converting the IG to final product, and thereafter the final product is further supplied. Thereafter the final product is further supplied. Is that point clear to all of you students? Okay, now come to the second proviso. Second proviso is the game, students. Second proviso takes the concept of deemed OMV, deemed open market value. In which case, students, when the deemed open market would be available, students, deemed open market would be if the recipient, students, if recipient is eligible for full ITC, eligible for full ITC, this is a condition. Then what is a deemed open market value, students? What is a deemed open market value? The value declared in the invoice, value declared in the invoice by the supplier. That exactly is the game. So that will become what? The deemed open market value. I hope that all of you are clear with this one. Any doubts or the queries that you may have now at this particular point of time? If not, then we will proceed. If not, then we will proceed further. Is that point clear? Everyone? Every one of you? Perfect. So I think the answers are known. Let's try to. Goods of like kind and quality are also not available. Goods of like kind and quality are not available. This is required in rule number 28. This is point number B. And I'm telling you, students, goods of like kind and quality. This phrase is required, students, when you are actually, see, one thing please understand. Two phrases are there, students. Are you aware of this two phrase? OMV, and the second phrase is goods of like kind and quality. For the last time, students, appreciate these two phrases now. For the last time, after that there is no second chance. There is no second chance after. When these two phrases are, students, being applied, can anyone tell me, students, quickly, where, in which context that these phrases are? So please pay attention. Open market value, when I'm talking about it, I'm talking about the open market value of my own supply. So my own supply means the supply which I have done, that is the, and which I'm supposed to do the valuation. So what is the open market value of my own supply? In that OMV is used. Okay. Now when this goods of like kind and quality is used, when the recipient is further supplying, when the recipient is further supplying, at that point of time, we refer it as goods of like kind and quality. We refer this as what, students? The goods of like kind and quality. This is what, students, we are referring. The goods of like kind and quality when the recipient does a further supply. So therefore, when he does the further supply of what? Goods of like kind and quality. Is that point clear to all of you? This is when we use this phrase. Now, obviously, students, in this question, if you see, they are telling you what? Goods of like kind and quality are not available. Why it is not available? Already we have discussed that who is the recipient. In my example, the recipient is the other unit in the other state. Another unit in the another state, that is the recipient. Now you tell me, are they supplying the goods of like kind and quality? Answer is no. Why? Because they have manufactured the intermediate goods which was supplied to them, and they have made it to a final product. So what they will now supply will not be what they will Now supply will not be a goods of like kind and quality, will not be a goods of like kind and quality, and therefore it is not available, isn't it? So I am trying to only uh, refine your thought on the topic, refine your writing skills, how you're going to ensure that what you write makes a lot of sense, because many students have unnecessarily by hearted these things without knowing what they are into and what they are writing in that context. So there is mismatch about what they have understood and what they're writing it. That refinement is what primarily I'm trying to do through these explanations. Now, if you see over here, after conversion, the finished product is sold from the said unit itself by the company. How will the value, how will the value of supply of this drug intermediate be determined under the GST law? So how will be the value of the supply of the intermediate will be done? Technically speaking, students, neither A nor B would be applicable. Technically speaking, neither A nor B would be applicable. One way of doing it, students, over here would be, can we do, students, in this case? A and B will fail. Obviously, it is very easy for us to go to C and take rule 30. 110% of cost of production. 110% of cost of production, that can be done, students. But one more thing which can be done, students, in this case. Please pay attention, students. One more thing, students, that can be done over in this case. What is that one more thing that can be done? Please pay attention to this, students. Are you aware of it, students? What is that point which I'm talking about it right now? In this context. Can I talk about proviso 2? Students, proviso 2. In a simple word, students. Rule 30, yes, is one of the answer. You will write that A is not applicable, B is not applicable. Okay, why A is not applicable? Because we don't have, in the question, they have not given us OMV. But though they have not given us OMV, students, though they have not given OMV, can we take deemed OMV? So A talks about OMV. Students, A talks about OMV. If OMV is not available, can we go with proviso 2 directly now and write that though OMV is not given to us, we can adopt deemed OMV, which would be applicable when it will be applicable? When it will be applicable? Applicable if the recipient is eligible for full ITC, in which case the OMV will be the value which is declared in the invoice by the supplier. In which case the OMV will be the value which is declared in the invoice by the supplier. Is that point clear to all of you, students now? Every one of you are now clear with this one? So always, as a thumb rule now, students, when you have to write the answer, now everyone have understood it. Question comes on rule 28. Be careful. Question comes now, examination note, students. Question comes on rule 28. And OMB not given. OMB not given. So in fact, without looking into point number B, you can write directly deemed OMB. You can hit directly OMB not given, directly write deemed OMB. Under proviso number 2, you will have to write like this. This is the deemed OMB. This is the deemed OMB. Is that point clear to all of you, students? Is that point clear to all of you? And you'll say, okay, sir, in this case, can we write, what about point number B? Yes, point number B also you'll write that if in the above case OMV cannot be adopted, because that condition is to be fulfilled, that the recipient can take full ITC, then the value of like, kind and quality can be taken. Like, kind and quality can be taken, which in the instant case it is not available. Which in the instant case, students, it is not available. That is what point number B says. Then what about C, students? This context. Then you will write directly now rule 30. Now here rule 30 you can apply. Yes, cost of production. Cost of production of what? Of the intermediate goods. Because you are supplying intermediate goods. No? Cost of production of the intermediate goods. This rule 30. So whenever a question comes so far as Rule 28 is concerned, and the question does not tell you about the OMB, doesn't matter. You will directly go to the second proviso and get your answer. You will directly go to the second proviso, students, and get the answer. For point number A. Then you will be diplomatic to write point number B, which is about the goods of like kind and quality, which if it is not available as like in this question, move on to C. But I'm telling you one more important point, students. Be careful. Huh? If supposingly, students, in this question, point number B, you had the value. Students, point number B, you had the value or you had the information about point number B, which is the goods of like kind and quality. Still, I'm telling you, students, still I'm telling you, you will have to respect point number A. And you do know in point number A, by going with the proviso number 2 easily, and that is the industry practice. Industry, they follow this second proviso only. Why? Because whatever I declare the value, on that value I have paid the GST, and the same GST will be eligible for you to be taken as ITC. Same GST which is paid by me will be made available to you to be taken as the ITC. That's a zero sum game, which already you are aware of it. That is the zero sum game, students, which you already are aware of it, isn't it? And that exactly is the point. So please understand this. If the question might give you the information about the like, kind, and quality, but your neck has to be on the OMB. Your neck has to be on the OMB as per the second proviso. As per the second proviso. I have made it myself very clear that the way you need to put up your answers so far as rule number 28 is concerned. On that note, students, now let's proceed further. Now, all these questions, students, we have done it. Iraka and all these questions, you see, we have dealt with it. Now, come to the Forex particular part, students. Forex valuation. Now, if you see, let's go to the valuation in Forex. Now, this is specific Forex, insurance. These are important rules. Forex and insurance. Lottery and all, they are not that important. You will not ask. Forex and this is important. So students, if you see rule number 32, which talks about the Forex over here, there are two methods, students, which has been there. Method one is the amount that has been paid, the conversion that has happened from the authorized dealer. You go with that conversion concept. And the second method, students, is the slab concept, where we calculate our tax liability in the slab way. Same way here also we have this slab way of determining the value of taxable service in respect of the foreign exchange, which has been changed to INR or vice versa, or foreign exchange depending upon. Students, if you see very carefully now, the first method that has been given to you is about the buying or the selling rate minus the RBI reference rate at that time. Students, this buying and the selling rate you should understand from whose point of view, not from the point of view of the customer, but from the point of view of the authorized dealer, because they are the supplier. And if they are the supplier, obviously for them we are calculating what is the value of taxable service. So say for example, students, like for example, you are going abroad. Now you are going abroad, so you want US dollar. So if you want US dollar, students, then you are buying. But what about that authorized dealer? Is he buying US dollar? No. On the contrary, he will sell the US dollar to you. What he is going to do? He is going to sell the US dollar to you. So therefore, it's a selling rate that is to be considered. So his selling rate to you versus the RBI selling rate to him, because the difference is his commission. His selling rate to you versus the RBI selling rate to him, that difference is nothing but his commission. Did you all got this one or not? That is the point. Come to the second particular point, students. The buying. How the buying will happen? Like now you are coming from foreign country in India, and now you have got dollars with you. What you will do? You will go to this authorized dealer, give him that dollar. You may be selling, but what that authorized dealer is doing, what the authorized dealer is doing, friends, he is buying it from you. He is buying it from you. So his buying rate to you, his buying rate to you versus the buying rate of RBI to him. The difference is his commission. His buying rate to you versus the buying rate of RBI to him. The difference is his commission. That exactly is the point. I hope that all of you are clear with this one. Into the number of units of the currency. Kavita, into the number of units of the currency. Isn't it? And that exactly the point. If no RBI reference rate, students, if no RBI reference rate, you'll say how that is possible? Why not? Like there are certain currency for which RBI doesn't take the pain to give its reference rate. North Korea rate currency. So therefore, in that situation, the RBI reference rates are not available. If it is not available, then in that case, what do you have to do? 1% of the INR received or provided. So whatever INR that I have given to him or I have received from him, 1% of that INR value is the commission or the value under rule number 32. Or the value under rule number 32. I hope that all of you are clear with this one. Why, students? And thereafter, students, if the currencies exchanged are not what? In INR value. You will say, how that is possible, sir? Isn't it? How that is possible? It is, everything is possible, students. Against dollar, I want euro. Against dollar, I want euro. That is the specific need. I don't want INR. Against the dollar, students, I want the euro. Then how I'm supposed to go about it? In such particular case, against the dollar, if I want the euro, then how I'm supposed to proceed in this regard? Indeed, you know what they are telling you? So they tell you, okay, fine, convert dollar to INR and convert euro to INR. Okay, and whichever is the at the this thing, see here is see lesser of two amounts that would be received by converting any of the currency into INR at RBI reference rate. So therefore, in that context, with the RBI reference rate you take, with the RBI reference rate that you take, and that exactly how you will deal with it. So therefore, in this situation, students, as simple as that. From like assume that I want dollars. Assume that I want dollars. So dollar to RBI reference rate of INR. As if that I want dollar to INR. Just as simple. The way I told you about a dollar to INR originally, same thing you apply here. Okay. Similarly, for that euro also you do the same thing. The way we discussed about that INR, what we discussed, that that forex dealer rate to me will be compared with the RBI rate to him. So rate for what? Rate for dollar, rate for euro. Separately you will do the calculation, and whichever is the lower valuation that you get in both this calculation, whichever is the lowest value, that is the lowest commission. So lesser means the lowest commission. Lowest commission. So in whichever case you get the lowest commission, students, that is the answer. Whichever case you get the lowest commission, students, that is the answer. Okay. And of that is the value of taxable service on which you will apply the GST. Now the second method, students, which I talked about it, is the slab method. Like how the slab method will go. So students, here, if the currency which I have paid to obtain the forex is up to 1 lakh rupees INR. So if the currency exchange is up to rupees 1 lakh INR, worth of 1 lakh INR, then what is the value? 1% of that INR amount or rupees 250, whichever is higher. Yes, Aishwarya. That is point number one. But you say, sir, no, sir. You went abroad and you gave 3 lakhs INR to get equivalent amount of USD. 3 lakh INR to get equivalent amount of USD. In such particular case, students, you will take what? 1000 rupees. This 1000 is coming from that first slab. This 1000 is coming from first slab. And then 0.5% students of the difference. What a difference? The difference you know in this case. My example, it is 2 lakhs. From 1 lakh to 3 lakhs. Na? In my example, it is 2 lakhs. 1 lakh to 3 lakhs, that is the difference of 2 lakhs. That is what it is. And supposingly, no, you say, no, sir, I gave 12 lakhs INR to receive equivalent amount of USD. I gave 12 lakh worth of INR to get the equivalent amount of USD. In such particular case, students, what will be the scenario? From 10 lakh 1. So in this case, 5,500. 5,500 students. So 5,500 is nothing but the first two slabs and then 0.1% subject to a maximum of 6. 0.1%. In my example, that 0.1% is on that 2 lakhs because I gave 12 lakhs. No? I gave 12 lakhs to get equivalent amount of USD. So that 0.1% of that 2 lakhs in my example. Plus 5,500, take the total. This is the value of the taxable. So this is the second method. First method is already told to you. That is the one case. And second one is this. This is how, students, the forex has to be considered. On that note, students, let's take up that question. Let's take up that question, students, now. Question number? Question number 11, students. Prada Forex Private Limited, registering in Delhi, is a money changer. It has undertaken the following purchase and sale of foreign currency. It has undertaken the following purchase and sale of foreign currency. What it is, students? You can see for yourself. Point number one, 1000 US dollar are purchased from Nandi Enterprise at the rate of 74 per US dollar. So 1000 you are purchased from. So we are purchasing means Nandi is giving to us. So we are purchasing from the customer. At what rate we are purchased? In this case, at 74. So we will be giving them 74 rupees per dollar. How much we are purchasing it from the RBI? In this context, RBI reference rate for that on that day is 74.60. Therefore, the difference, as you can see, 0.60 into 1000. So we will be giving him only 74 rupees. We will be giving him, students, only rupees 74 for per dollar which we are purchasing. For per dollar that we are purchasing, how much we are going to give? We are going to give only 74. Whereas how much RBI has given to us? Obviously, they are giving us more. For $1, if I give to RBI, RBI is giving us 74.6. Whereas to my customer, Nandi, for $1 that they give it to me, for this purchase, I give them only 74. So 60 is the extra commission which I've received because from RBI I received 74.6, whereas I've passed on to the customer only 74. Difference is how much? 0.6 into 1000. That exactly the point. That is what I have got it in this context. Point number two, 2000 US dollar are sold to Menawati at the rate of 74.5 US dollar per US dollar. 2000 US dollar are sold to Menawati at the rate of 74.5 per US dollar. RBI reference rate is how much, students? Is not available. If it is not available, then directly 1% of what? 2000 into 74.5, whatever is the amount, take 1%. That will become the value of taxable service. Determine the value of each case above. In this one, this is that slab. So this is what is the first method. Friends, be careful. If they ask you like this, you should know. This is the first method. In that first method, I taught you right now first method only. All these were the first method. Second method is a slab. If I go with the slab method, students, you can see for yourself. what exactly it is. In the first case, 74 into 1000. How much is the INR amount? 74,000. Now 74,000 students, you yourself have to do it. In the second case, students, how much is the amount? That was going 2000 into 74.5. So it will go in the second slab, this context. So I think all of you are eligible for it in this context. So I hope that all of you are clear with this one now. See the slab wise working. First slab 74,000. So which slab? 1%, students, as you have told it correctly. So in that situation, students, so therefore 1% of 74,000 or rupees 250, whichever is higher. So answer is 740. Answer is 740. All of you agree? Answer is 740. That is coming from the first point. Come to the second one, students, over here. 74.5 into 2000, which is 1,49,000 rupees. Now, in 1,49,000 rupees, students, if you can see for yourself over here, what does you get it over here? So, out of the first slab, students, already 1,000 you have got it. 1% of 1 lakh is 1,000. 1% of 1 lakh is 1,000. So, from the first slab, already 1 lakh is 1,000 is known. Now, 0.5% of how much? The remaining 49,000, which is 245. So the total is 124. 0.5% of 49,000, which is nothing but 245. The final answer is 1245. I hope that all of you are clear with this one, students. Every one of you, and that exactly is the point. This is the question. Roly Poly Manufacturers Limited. Really a good question, because this is about the case of pure agent, students. At this particular point of time, students, the concept of pure agent will come into play. This particular point of time, students. Second. So just read this first two paragraphs in the meantime. Fine, students. So I hope that all of you are through with this one. Every one of you. So, students, this is the case of pure agent. As you know, students, every supplier, like for example, a chartered accountant, he is also doing the work for his client. And while he does it for his client, certain expenditure are always out of pocket, for which he will take a reimbursement. Isn't it? He will take what? The reimbursement. Like the air travel, or for that matter, students, the hotel stay expenditure. So all these expenditure, students, that we see, which is also added in his invoice, these are additional charges which is recovered from whom? From the client. These are the additional charges, students, which has been recovered from the client. Question therefore is that, now please understand, under 15.2c, if you remember what 15.2c is, inclusion. Inclusion on what? On any incidental amount which is charged by the supplier. Any incidental amount which is charged by the supplier. So by virtue of 15.2c, all these amounts are added in the value of taxable supply. But in many a case, you find that it becomes very unfortunate. Very unfortunate, where the supplier is completely doing for whom? Not as a supply, but as an additional amount which he has to bear at behest of his client. But that is not something which is coming under his own supply. That is third party supply, which he is told to told to arrange for it or facilitate for it, and that is what he is doing. And if he is arranging, and if he is facilitating a third party supply for which he is charging to his buyer primarily in the invoice, because why he is charging to the buyer? Because obviously first he had to pay to the third party, and thereafter he is taking a reimbursement. And because he is taking a reimbursement, he is charging to whom? To his receiver, to the recipient. Now 15.2c becomes very harsh now in this case. 15.2c says what? The very fact that you have charged it in your invoice. What 15.2c says? The very fact that you have charged it in your invoice. Therefore what? It will be considered as a part of your value of taxable supply. 15.2c will add it up, this particular point. And that is where this particular point number 12, that is where this particular concept of pure agent under rule number 33, pure agent under rule number 33 will come into picture. Now what is this rule number 33, students? Let's first read this rule number 33. Pure agent: if you are acting as a pure agent in respect of those expenditure, if you have acted in as a pure agent in respect of those expenditure, are you allowed the benefit of deduction? To that the answer is you are allowed the benefit of deduction. So therefore let's have a look to this concept of pure agent then, students, in this regard. So as per explanation to rule number 33, a pure agent means a person who, point number A, enters into a contractual agreement. Be careful, students, over here. Enters into what? A contractual agreement in this regard with a recipient, with the recipient of the supply, to act as his pure agent, to act as his pure agent, to incur expenditure or cost in the course of the supply of goods or services or both. Okay, so there has to be a contractual agreement. Now this contract can be oral or it can be written, doesn't matter. So that there has to be written contract, not necessary. Oral contract also is sufficient enough. What is this arrangement all about? That in respect of a certain expenditure, you will act as my agent, pure agent. So receiver is telling to the supplier that in respect of certain expenditure, please act as my pure agent. Point number B, he neither intends to, neither means who, neither in this context, the supplier. So they are talking from the point of view that the supplier is neither intending to hold nor it holds any title to the goods or service so procured as pure agent. So it means what? That third party supply for it, for which he has been appointed as a pure agent, for which the supplier has been appointed as a pure agent, for those particular supply he should not be holding any title. For those particular supply he should not be holding any title. Do you know what does it imply? It implies that the invoice should not be in his name. Students, the invoice should not be in his name. That is what does it mean? So what this particular person should do, he should take the invoice in the name of the recipient. What the supplier should do, students? The supplier should take the invoice in the name of the recipient. That is what he should do so far as point B is concerned. So far as point B is concerned, come to point number C. Does not use for his own interest such goods. This is where that example which I have given you, students. This is where, students, the example which I have given you of that CA, that fails. Why? Because the flight service or the restaurant or the hotel service, who has used it? Who has used it? The supplier, which is a CA. Whereas to become a pure agent, what does it this clause says? To become a pure agent, this clause says that you should not be using that particular services, or you should not be using those particular goods for which you have been appointed as a pure. But as I gave you the example of the CA, the flight services and the hotel services, did the CA has availed those facilities? Yes. Did he use those facilities? Yes. Because he has used those facilities, therefore the condition of pure agent is not fulfilled on that particular item. Condition of pure agent is not fulfilled on that particular item. That is the point. And point number D, students, he receives only the actual amount. He receives what, students? Only the actual amount. Obviously, cost to cost. There should not be any profit element in that. So, students, obviously, you will have to write in the examination, isn't it? Better that you try to use the mnemonics so as to remember these points, because you will have to write, students. There is no escape from it. There is no escape from it. So, first is the contractual arrangement. Second is what, students? He is neither intends to hold nor holds the title. The title in this particular context. He should not be using the goods or services so procured and the actual part. The actual amount has been charged. So, quota. So what you can say? Quota. Quota is key for contractual. He should not be using it. He should not be holding the title, and on the actual basis, the reimbursement should be done. I hope that all of you are clear with this one now. Now, based on that, students, if you see in this above question, students, the agency charges is his own commission. The agency charges, students, is this his own commission? Yes, this is his own commission of rupees 5 lakhs. That is perfectly fine. We don't have any argument on that. This agency commission, students, is his own charges, 5 lakh rupees. We don't have any issues on that. Okay, that any case will go under section 15.1. Now, issue is that there are strings of charges which he has incurred, for which I told you, 15.2c. But if you are a pure agent, then those amount will not be added. So, which are the items for which, because he is a pure agent, it will not be added under 15.2c? Let's have a look. Unloading of machine at Kanla port, all that, students, you can say unloading. So this item he is adding, obviously that again, for my this thing is over. But all that, whether can I say that contract, title, use, and the actual reimbursement, all that 4 points, are they satisfied? Yes, we can say that they are all satisfied. So this is satisfied, students. Come to point number 3. Charges for transportation of machine from Kanla Port, Gujarat to its Rudra Logistic Godown. Again the same thing. That particular transportation of that machine. So I arrange for the transportation. Just I should ensure that the title I should make in the transportation should be of the receiver, not in my name. So those things which is required to become a pure agent, I should take care of that. Okay. Again, there is a transportation charges. That is what I need to take care of it. Then prepared and submitted bill of entry and paid custom duty. Now in custom duty also, this title is not of my name. The custom duty is paid in the name of that particular client. That is point number 1. Actual amount is what is taken as a reimbursement. That use condition is not applicable. That nobody uses the custom duty. Unlike in the case of goods, because it is neither a goods nor it is a service. It's a duty that you have paid. And there is a contractual arrangement. So that is satisfied. Dock dues paid, yes, you can reduce it. You can consider it as a pure agent. Conditions are satisfied. Port charges paid, absolutely fine, not an issue. The issue will come in this 3. Why? in this 3 item students that you can see. So with the 3 item students that you can see here, I have students use those things, and because I have used it, because I've enjoyed it, because I've availed these services, therefore I cannot be considered as a pure. Since I cannot be considered as a pure agent, I cannot take the deduction of these. Is that point clear to all of you? So friends, if it comes in the examination, this kind of a question, please be careful on one point, and it is given over here, and you can appreciate the presentation, but just I'm making you aware. Don't comment like the way I have done it. For each items, 50,000 unloading, transportation 25,000, again 28,000 transportation, not one line item. You have to comment like from point number 2 to item number 7 in point wise. He is a pure agent. So if I have to write, students, in this case, my statement would be for item number 1. This is the transaction value under section 15(1). What is that amount? 5 lakhs. So this is for point number 1. Presentation. You're talking about it now. 3 points. Second is, students, 2 to 7. He is a pure agent. Because, now I'll explain, that quota is satisfied. Quota is satisfied. All the 4 points I'll write. Now, when it comes to point number 3, in this case, 8 to 10. Now, in 8 to 10 students, I am not going to write again entire quota. No, not a pure agent. Not a pure agent. Why? Because I'm only talking about that use condition, not certain. Quota is already explained in point number 2. Are you aware of how to write all these things? Use condition not satisfied. Are you aware as to how to write it or not? Don't mechanically only try to see what is the answer, what is the solution, and what is the concept. How to write is the real thing. 1, 2, and 3 I already told you now. By this practice batch, students, you should elevate and should score the best paper award now by virtue of this practice batches. Point number 1, line item is 1, transaction value under section 15(1), and that is rupees 5 lakh. Point number 2, it is 2 to point number 7. With 2 to point number 7, he is a pure agent. Now you explain quota. There is a contractual arrangement. He is not using for his own purpose these services or goods. Under point 2 to 7, there is a he doesn't hold, nor he intends to hold the title on these expenditures. The last one is that the reimbursement that is sought by the supplier is on actual bill. So all that 4 is satisfied. In point number 3, when you write, don't write again full quota, only that use condition pinpointed that cannot be considered as a pure agent because he is using these particular goods for his own purpose. Therefore, he is not a pure agent. I hope that all of you are clear with this one now. With that particular point, students, come down to point number 13, question number 13. Rustagi and Company customized product at its unit situated and registered in Madhya Pradesh. Cost of production is 1000 in this context. Now, students, this I want you to do homework. This, because why I'm saying so homework? Because the way we explained the above one, remember the same theory, which was the first question that we did? That intermediate goods. Remember that intermediate goods question? That intermediate good question. Same thing they have given you in the practical now. Same thing they have given you in the practical. So what you will do, students, immediately after the lecture gets over, you will try to solve this. Now do present it properly, students. I want the proper presentation. Please take an effort to now make a proper presentation. Considering that this is for 5 marks. Considering what? That this is for 5 marks. Okay, and just try this one out. And if it is possible, show me the screenshot through WhatsApp. I will be just seeing how you have presented it, and if there are any further improvement. Don't go by this standard solution. Go the way I have taught you through now. You should be now be in a position to do it. You can just share the screenshot of the solution through WhatsApp. Same question is there, so I'm not repeating this one. This is the simplest one. Let's do this simple one. Question number 14. Dev Enterprise is supplier of water coolers. Dev Enterprise supplied water coolers to an unrelated party, Vimal Trader, for a consideration of 295, inclusive of GST at 18%. Whenever it is inclusive of GST, always bear it in mind. Rule 35. Vimal Trader also gave some material to Dev Enterprise. Now, who is this Vimal by the way? They are the supplier. Okay. And Vimal Trader, and they have gave it to 2 lakh. Did we did this yesterday? This is nothing we are doing it. Now, Vimal Trader also gave some material to Dev Enterprise, valuing what? Valuing rupees 10,000 exclusive of GST as an additional consideration for such supply. So, students, you can see over here in this context. So, the consideration is in the form of what? 295 plus the additional consideration of 10. So, can I say this is a non-monetary consideration, Rule 27? So, this will go under Rule 27. At the same time, Dev Enterprise has supplied the same goods to another related person. Now, this is my OMB. So, Dev has given the same goods to another related person. So, if I value of such supply, open market value of such supply, so therefore it is what students 297. This is inclusive of GST at 18%. So, I'll do the reverse calculation and I'll come to the normal value. I'll do a reverse calculation, students, and I'll come to the normal value. And that is what I'm going to do. At the same time, Dev Enterprise has supplied the same goods to another unrelated person at a price of 297,360. You are required to determine the value of goods supplied by Dev Enterprises to Vimal traders. So that is the first point. Determine the value of goods supplied by Dev Enterprise to whom? To Vimal trader. So what you are going to do, students, in this case? I think that you already know the OMB. OMB is the answer. Only thing is that you need to do a reverse calculation. What is the reverse calculation? Rule 35. Apply Rule 35 and do the reverse calculation. You'll get the value. What is point number 2? What would be your answer if the price of 297 is not available at a time of supply? So OMB is not available. If OMB is not available, point number B says what? So point number B says what then? For Rule 27, point number B says what? Monetary consideration, which is 2,95,000. Now this 2,95,000, students, monetary consideration, which is 2,95,000 into 100 divided by 180, plus what, students? Plus that material monetary value of the non-monetary consideration. Monetary value of the non-monetary consideration. So this is what the B says, because OMB is not available. In my second part of the question, OMB is not available. So therefore, if OMB is not available, I go to point number B under Rule 27, which says the monetary consideration plus the monetary value of the non-monetary consideration. This is how I'm going to get it. This is how, students, I'm going to get it. Is that point clear to all of you? That exactly the point. That exactly the point. Now, friends, this is the insurance part. In the morning, friends, I gave one chart. I just want all of you to also comment on this chart. People can take also benefit for the This is the point, students. Can you copy it on this one, students? Insurance, students, there are two types of insurance over here. If it is only the risk cover means, students, that if I die, if something happens to me, my family gets the money. That is it. Only on the death that the amount is being paid. This kind of an insurance are known as insurance towards risk cover. Now, the value of taxable supply, if you see, students, the value of taxable supply would be the entire amount of the premium. Okay, in the case of when the insurance is only for the risk cover, the value of taxable supply would be the entire premium itself. But when the insurance has the annuity element also in this, when I say annuity element, students, what does the annuity element would mean? It would mean over here, students, that, like for example, annuity means what? They do the investment now. So it's like through annuity, you get like a pension, students. By virtue of the annuities and all, students, it is one way of you to get the pension. So they are in fact giving you the pension through that annuity scheme, students. What they do is they are giving you the pension. Is that clear to all of you, students? All of you. So the pension is what is being given in this context. Now, obviously, students, they will take, say, for example, 100 rupees is the premium. So what they will do is that, say, they will have, say, 80% they will invest in the securities. 80% students, they will invest in the securities. Okay, so if the 80% is what they're investing in the securities, think logically, students. Think logically. In that case, what does it imply? It implies that the money is invested in securities, and you already know that securities are neither goods or nor service. Investment, buying and selling of security is neither a goods nor a services. It's already out of the definition itself at first place. And that is the reason why whatever is the portion of premium which they use to invest in the security, that will be excluded. So unlike in the case of risk cover, if you see the entire value and the entire premium is considered as the value of taxable service. So far as the annuity is concerned, students, so far as annuity is concerned, in that case, you reduce the amount which is allocated for investment. You reduce what? The amount which is allocated for investment. From the premium, like in my example, 100 was the premium, 80 rupees, which was meant for allocating towards the investment towards that securities. I am removing 80 and balance is 20. But many a time, students, I'm not knowing. See, this is when I know how much is allocated to the investment. Many times the insurance company doesn't tell me. Many times the insurance company doesn't tell me how much would be in the security. So if the investment is not intimated, so two things are there. How I've written, investment is intimated, and what is the second part? Investment is not intimated. If it is not intimated case, then it goes like this. Single premium. If that investment is a single premium, like Amitabh Bachchan, I know him, he is recently, now these people who are already crossed at age bar, they actually go with the single premium concept. Why they go with the single premium concept? Because they do know the very fact that they don't have that normal 20-30 years lifespan. So single premium is what they do it. And many policies are there which is meant only for single premium. It's a very high value. The value of taxable service. If now this again I'm repeating, so this you have to apply when the investment portion is not known, then this sub bifurcation is required. If investment portion is already intimated, then you don't go with this bifurcation. How much is the premium would be? So that is the you will, if the investment is intimated, then you don't have to see whether it is single premium or it is other cases. When the investment is known to you that from my premium this much portion is going to be invested, remove that much portion, and that will give you the value of taxable service. But where you are not intimated how much of the amount will be invested at that stage what? That stage you arrive at this kind of figure. Whether it is a single premium payment or it is for other case. If it is a single premium payment, then value of taxable service would be 10% of the single premium. In the other cases, students, that is Just like my policy. If I've taken some of the annuity policy, so some of the annuity policy, first year, what is the value of taxable service? The first year of the policy, 25% of the premium amount. And from the second year onwards, what is the value of taxable service? It is 12.5% of the premium amount. So in my case, I can relate with this. I can also relate. I've got some risk cover also, some policy which I've got this one, so I can relate in this two particular cases. Other things will move. Did you all got this for today? Have you all copied on this one? Every one of you? Fine, students. Shall we now go there in students in that question? Perfect, students. So let's go to that question, students. Another question. Question number 15, students. Kirayo Life, Kirayo Life Insurance Company Limited has collected premium from policy subscribers. It does not intimate the amount allocated. Does not intimate. One, that minus that you have to do of the, this would have been very simple one. No? Now you have to go with the other part. So it does not intimate the amount allocated for investment to subscriber of the policy at the time of supply of insurance services. The company has provided the following details in relation to its receipt. Premium for only risk cover. So student, this risk cover, any case, is fully taxable. Entire 25 lakhs would be the value of taxable service. For risk, we have already seen that. Premium for new policy holder. How much is that? 40 lakhs. So for the new one, and it is not intimated. Is it a single premium? Doesn't say so. Single premium students, they have given it already here. So therefore, in that context, premium for the new policyholder 40 lakhs. So 40 lakhs into 12.5%. So this premium for the new policy subscriber 40 lakhs into 12.5. Renewal premium, sorry, 40 lakhs into 25%. So this 40 lakhs would be at 25%. Renewal premium students, if you see, it is at 12.5%. This 80 lakhs would be at 12.5%. That is for renewal premium. The next one, students, if you see single premium on annuity policy. The single premium, students, on what? On the annuity policy. How much is the single premium on annuity policy? 1 crore. So you take 10% of that. 10% of that. All the amount of exclusive of tax, you are required to compute the value. I hope that this 25 lakhs is this. 25% for the first policy. New policy. Renewal is 12.5%. Single premium is 10% and the total value is 55. This is the simplest of the lot. Okay, students. With that, now we come to the last question. Last question, students, is an important one. The last question now that we are supposed to handle now, this case. Question number 20. Honey Cure Laboratories Limited is a registered supplier of bulk drugs in Delhi. It manufactures bulk drugs and supplies the same in domestic and overseas markets. The bulk drugs are supplied within Delhi and in the overseas market directly from the company's warehouse located in South Delhi. The bulk drug students are supplied within Delhi and in the overseas market directly from the company's warehouse located in South Delhi. For supplies in the other states of India, the company has appointed consignment agents in each such state. This context. Each such state. So therefore, if you see for supplies in the other states of India, the company has appointed consignment agent in each of such states. So students, what are you going to say about it? About this particular point? So for supplies in the other states, now be careful over here, students. He is supplying within Delhi and also in overseas market. And see, this is one thing which is there. From this sentence, it is in within intrastate and interstate in the form of export. That is what we get it from here. And if you see over here in the next particular one, for supplies in the other state of India, the companies has appointed other states. So therefore, in that case, to the other state. So it is interstate supply. The company has appointed consignment agent in each such state, students. They have appointed what? The consignment agent, students, in each such state. So therefore, can we say it is interstate supply? Now, if it is a consignment agent, then you would know. Then from us to that agent, para 3 supply can come into picture. This could be considered to be a para 3 supply. That we will see later. Our supplies in Gurgaon and Noida are affected directly from South Delhi warehouse. So there is no agent that is required over here. Why? Because it is very nearby, na? Delhi, which is the location, to Gurgaon and Noida. So there you don't have any agent. You directly supply to Delhi and Noida, but it will be interstate. The drugs are supplied to the consignment agent from South Delhi warehouse. This would be para 3 supply. We'll see that. Honey Cure Laboratories Limited also provides drug development services. Please understand, they are providing what? Services over here. So there is supply of goods, now supply of services. Now this services they are giving it to whom? To drug manufacturers located in India. So to whom they are supplying the services? To drug manufacturers who are located in India, including testing of the new drug in its laboratory located in Delhi. Testing of the new drug which is there in the laboratory in Delhi. The company has furnished the following information for January month. So be careful, this is what we are doing it for the month of January. Are you aware of it? This we are doing it for the month of January. What it is? Particulars. Advance received towards drugs development services. Now just see this advance received is how much? 5 lakhs. Okay. So obviously he has received the advance in the month of January. Actual service of such advance has happened when the actual service has happened in February. And the invoice also for such actual service has been given in the month of February. Actual service, students, has happened in the month of February. But the advance you have received in the month of January. Now, students, do you know in the next topic that you are going to learn, which is the time of supply, advance for service, the time of supply under section 13 talks about the time of supply being when the advance money is received. In respect of services, if you receive any advance money, then the time of supply would be the date when the advance money is received. And that is the reason why it is the month of January when the advance money is received would be the time of supply. And accordingly, this rupees 5 lakhs would be considered as a relevant item for the statement of the month of January. This rupees 5 lakhs would be considered as a relevant item for the statement of the month of January. Relevant item for the statement of the month of January. Let's take the next one. Advance received for bulk drugs to be supplied to Novic Pharmaceutical, a wholesale dealer of drugs in Gurgaon, Haryana. Invoice for goods is issued at the time of delivery of goods in March. So students, do you see what is happening? Here I am getting the advance for what, students? Advance for the goods. Now you, unlike in the case of advance for service, wherein there is a concept of time of supply for advance of service, there is no such time of supply provided under section 12 for advance for goods. So therefore, you will not find, you will come to know also when we do time of supply, which is your tomorrow's topic, that you will not find any provision in respect of the advance received for goods. Advance for service, yes, you do have, not for the goods. And therefore, the time of supply will not be January. On the contrary, the time of supply would be in the month of March when the invoices are being issued or when the goods are being supplied. So, advance which you have received, this is not a time of supply, so therefore, I'm not going to consider it statement of the month of January. Let's take the next one, students. Supply of bulk drugs to wholesale dealer of drugs in Delhi. Supply of what? Bulk drugs to wholesale dealer of drugs in Delhi. So it is intrastate, 60 lakhs intrastate, students, isn't it? And that is what it is. CGST and SGST. Bulk drugs supplied to Anchor Pharma Inc. USA under bond. So this is an export and accordingly no GST. But the presentation would be an important one. I'll let you know some presentation part also on this. Drug development services provided to, now this is a services, students, provided to Unipharma Limited, a drug manufacturer located in Delhi. So it is still Delhi. Therefore, it is intrastate, CGST and SGST. You are required to determine the GST liability, CGST, SGST and IGST as the case may be of Honeybcure Laboratories Limited for the month of January with the help of the following additional information by it for the said period. What is the additional information? Point number one, consignment of bulk drugs were sent to Cardinal Pharma Private Limited and Rochester Medicos, agents of Honeybcure Laboratories in Punjab and Haryana respectively. So they are the agents. Cardinal Pharma Private Limited and Rochester Medical supplied these drugs. So can I say this is what supplied these drugs to medical stores located in their respective states for how much? 60 lakhs and 50 lakhs. So can I therefore say, students, it is that they are supplying, they are further supplying the like goods and quality to unrelated customers. And if that is what is happening, the agent is further supplying the like goods and the like kind and quality of the goods to whom? To unrelated person. And if that is the case, then Rule 29 says what, students? Rule 29 says take 90%. So I can take definitely 90% students of what? 60 lakhs and 50 lakhs, which is the resale value, which is nothing but the resale value. So 60 plus 50, 1 crore 10 lakh, 90% would be my value under Rule 29 for this item. That is what it is, Rule 29. And then comes point number 2 over here, students. Bulk drugs have been supplied to Ron Medicos Private Limited, a wholesale dealer of bulk drugs in Gurgaon. Now this I have directly sent it to Gurgaon. No? So this I have directly sent it to Gurgaon for consideration of rupees 15 lakhs. Honeybcure Laboratories Limited owns 60% of shares in Ron Medicos. So the Gurgaon Ron Medicos, I am holding 60% in that Gurgaon Ron Medicos. So we are related party. If we are related party, we will go to Rule 28. And if we go to Rule 28, students, first is the open market value. First is what? The open market value. Do we have the open market value in this particular context, students? So what they have given to us is that in this context, open market value of the bulk drug supplied is 30 lakhs. They have given to us. So open market value has been given to us, students, which is 30 lakhs. Now, can I apply, students, in this case, provision number 2 also? So 30 lakhs is one option with me. 30 lakh students is one option with me. Open market value. But if I say provision number 2, what does this provision number 2 say? As per provision number 2, in rule number 28, what does it say? I told you this is what industry goes with it. They say that, look, boss, the amount which I have charged is 15 lakhs. How much is the amount that I have charged? How much is the amount that I have charged? I have charged 15 lakhs, 1 5. To whom? To my related person. If my related person is eligible for full ITC, if my eligible person is eligible for full ITC, then we settle as per provision number 2. Then I settle as per provision number 2, students. Isn't it? But if you see in this question very carefully that the recipient is not eligible for full ITC. And because recipient is not eligible for full ITC, therefore, students, the provision number 2 will not be answered. We will answer it. That provision number 2 is not applicable. We'll answer that provision number 2 is not applicable. We'll answer that, students. Don't worry. Why? Because of this reason. But therefore, our final answer would be point number A. What is point number A? Open market. Point number A would be open market value, and that exactly is the point, students. Based on that, students, thereafter, the rates are being given to you. The various rates, students, are being given to you. That exactly the point. CGST rate for services are different. If you see, students, over here, like how you prepare the statement, particulars, whenever you have to calculate the GST, CGST, SGST, and IGST separately. See, in this context, you will have to prepare the statement in this particular manner. Now, one point I just wanted to bring to your observation, students, and that point is this one. Students, be careful. That point is this one, students. Can you see this advance receipt for the bulk drugs, which has been supplied to advance receipt from the party in Gurgaon. For goods, I have told you, students, advance receipt for goods. Time of supply is not in the month of Jan. So you will not consider anything right now. As and when the goods would be sold or the invoice would be issued, that time you will consider it. Right now, this is not the appropriate time. So I am writing nil. But do you know where I have written nil? I have written nil in the IGST column without doing anything about CGST and SGST. This is a very minute observation, student. So this nil has been written in the IGST column. Did you realize this particular part? This nil has been written in the IGST column. Same way, if you see the bulk drugs supplied to Anchor USA against the bond, the bulk drugs which has been supplied to Anchor USA against the bond, that nil has been written in the outer column, the last column. That is where the nil has been written, friends, over here. That is also one of the important point. IGST, they are interstate supply. They are interstate supply, but the value is nil. Why nil? We have already explained the reason why it is nil. But you have to write in the last column because it is an interstate one part thing. That is the way the presentation has been done in this context. That is the way the presentation has been done. Now, students, the homework that you will have to take over here is you will go through the notes. The notes part, students, all of you are going to go through it carefully. Of this question now, the two homework quickly, students, you have to do. One is already that question for which we have made the discussion. So please make the format. And second is this question for which we already did the discussion. Just go through the notes. Okay, just go through the notes part. So just now only you have to do it. Don't keep it for tomorrow. Tomorrow will never come. In CA students' life, tomorrow never comes. You have experienced this journey for the last 3 or 4 years, isn't it? Whatever has to be done has to. Students, I'll see you now tomorrow. Now, with that, we are done with the valuation part, students, completely, thoroughly. This context. Now, couple of valuation, like I told you, specific valuation like lottery, gambling. That note, students, brief notes is already there. Summary notes is there. Just go through. Okay, it will not come anyways in the examination, but still you go through that so as to secure your interest. Just to secure your interest. Okay. That is the only particular part. This is what it. We'll see you then tomorrow, students, for the new topic, which is the time of supply. So after time of supply, students, payment of tax, place of supply, thereafter ITC. This is the flow. After ITC, students, the strings of all the registration returns, you have the demands, penalties, all that topic, and then finally we'll end up with the exemption and the RCM. That would be towards the end. Towards the end. So this is the flow in which the things would be done so far as the GST is concerned. So September will be done with GST. I am doing only GST students. So customs and FTP 20 marks. Do it at your end. Do it students at your end now. Get started quickly now. Okay. So don't wait that in October I'll touch upon this one. It is not going to happen in October. I have to do something else probably which is there in my mind, but something else will be done in the month of October. Primarily, right now, you focus to do customs and FTP, finish it off, a little bit things, and the GST. I've already have told you the way it has to be. See you then, students. Next class.